Good morning, everyone. Well, it looks like prices have reached their destination. Straight up move. As I say on a daily basis, look to the left and right at that resistance area. Too far, too fast, which opens up the door to some type of retracement. It could go above the high, and that would be a little bit of a kicker to just convince everyone that the trend is up over the last few days. And that would be an obvious place for it to stall, other than prices just being directly to the left there, where there's additional supply and everyone can see it. And looking at, I guess this was a news report where the jobless claims spiked up and coming right back down again. Clearly, sellers taking advantage of that push up toward that resistance area one more time. And we can see the hourly chart hasn't broken down yet because our major support area is over here. So as it's pulling back, again, looking to the left, area of support, things begin to stabilize, news item spikes it up, came back in, but hasn't broken down yet. Well, this is where we need to see if it is going to start to retrace a little further. It'll break down below here. And we discussed multiple times in the green room. And even yesterday, we were reviewing some charts that possibly would be rolling over that had pushed up. Now, we always review the daily chart, whether it's up at resistance like this in an extended short-term move, or it is at an area of resistance and it's trending down. Being there and just trading under a prior day's low, whether it's a green day or a red day, the higher probability setup is when you have multiple timeframes aligned, which takes, usually, either 2, sometimes 3 days, depending on how things shape up, where the hourly chart forms a topping pattern and then begins to break to the downside. Again, having multiple timeframes in alignment puts the odds in your favor. Common sense. It doesn't always happen that way, Tony. Obviously, we look at patterns that guide us to trading opportunities, and the highest probability ones, which is what we talked about yesterday. And what I'm explaining today is that, a turning point, unless it happens violently, where it maybe gaps down under a low and violates the hourly trend, once it reaches what I'll call its destination, sellers aren't going to give up in the moment. This trend is, it's been moving up. The hourly trend is up, possibly the 15 is up. And the idea of using multiple time frames, as explained in yesterday's MT Live, with the moving averages lining up. Whereas, on the daily chart, using the 20, the 50, the 200, this is a 100, 200, it's way down here since, it had this big move. But as it applies to the 5-minute, using the 20, 60 equal to the 20 MA on the 15, and then the 200, which is close to the 20 MA on the hourly. So, whether you're a day trader using the 5-minute, the concept is the same. Get multiple time frames in alignment and the odds are in your favor. Whereas now we can see, the hourly, again, 24-hour chart is pointing down, the shorter term pointing up. You're more likely to get whipsaws. So as it applies to a swing trade, when prices come up to an area of resistance and begin to roll over, taking 2 days, sometimes the beginning of the third, where the hourly begins to form a topping pattern. And then when it breaks, while this is still up and you're looking, in this case, for a retracement, for short-term trades, this rolls, and then, you get shorting opportunities. Now, obviously, the best opportunities, if you're going to be swing trading short, is when prices are trending down versus a momentum move up, Whereas, this would we just be looking for short-term trades, where it's better to go to the intraday chart to do that type of shorting, because, as this pulls back, we say, okay, here's our major support way down here, the 50 MA, which will become a targeted point. And this minor resistance area, we say that's subjective because it's beyond what's directly to the left, where these bars, these open and closes, are overlapping. Not as much as we'd like, but you can see what I'm talking about. Right here is where there'll be the more significant support area as it relates to the daily chart, where these opens and closes are overlapping, which is, right here, which is the most significant support. This is our first support on the hourly. So if this breaks, there's really nothing here of significance. And down here is where prices would likely find buyers, somewhere in this area. So the concept of overlapping opens and closes on a higher time frame being a base in a smaller time frame, this is a good example of what we cover in the MTS course on that concept. So at resistance, markets have stalled, hasn't rolled over yet on a smaller time frame, and we'll see if that happens today, or whether this, under the opening price for now, can make one last push up above here. Would be an obvious place for it to stall based on the 100% retracement concept. All right. NQs, look to the left over here at that pivot high, and at resistance, it stalled. It had a powerful move up. Hourly has broken major support. And the next concept in MTS, well, where's the next reference point of support? How close are they together? If they're relatively close together, anticipate choppy price action. It's exactly what's happening. It bounced off of here. Now, as this does, whether it's sideways or maybe it pops right back up again, we'll see. But if it starts to break here, this is where the momentum will pick up to the downside, because there's nothing to the left. There's just a price void. So there's nothing to trade against. And this correction through time, right, if it breaks down, forms an area of supply or overhead resistance. Right? We don't know yet. We've got to see if it actually breaks. Even though it's corrected a bit, it may be forming an area of price support, and it pops back up today. And so the idea of the greater than 100% retracement, with this did a little peekaboo above there, but maybe the S&Ps do that, and that's where it rolls back over again. So the next area, we look to the left here, well, it's not too far away where this would push up into. Let's not forget, on the weekly time frame, the Qs have violated major support here. So if this is going to be some kind of a bearish turn, it's yet to unfold, but looking at multiple time frames, that is something to keep in mind, to see possibly next week, this begins to form that consolidation, this rolls over, this pulls back, and then we just see how far it pulls back. Tony said, when NQ hourly breaks, short the next sell setup. Right. So Tony, if you're going to trade the hourly chart, yes, that's what you would do. But once this breaks here, that provides us a bias that says, hey, this higher time frame is rolled over. There's a void. It should go lower to where, right? This is the thought process. Well, somewhere down here, because there's nothing in between. Now we go, if we're going to trade the 5-minute, if you're going to trade the hourly, yeah, you'd short the hourly sell setup. If you're trading the 5-minute, well, this is just a big mess. So as these moving averages line up, and get a little more data here so it expands the 200. As these are pointing down, right? Well, this started to push up, but you see the 15 minutes pointing down, the hourly's pointing down. You're looking for sell setups on retracements. So that is how I would do it. But If you want to do it off of the hourly or the 15, the beginning part of the analysis is the same. Hourly rolls over, it's got a void. Now pick a time frame where it's at an area of resistance, and then you get a sell setup. We don't have that yet. And so far, it's just stalled after a run up, which totally makes sense. And now we'll see if it actually rolls over or not. And just coming back up again, we're just into what would then create a trading range, which is possibly what's going on right now. And it is a trading range. It's at the bottom of the trading range, and it's retested. Whether it pops back up to the top or whether it can't get through this pivot high and rolls over, we're watching to see what unfolds at this point. And it's based on this trading range, based on the 5-minute, based on this having, powerful move up at this moment, based on this chart, there's nothing to do but to wait to see how this evolves. Russell hanging up here near resistance. And we've been talking about this all week. Well, we've been talking about this all year, pretty much, that this is in a trading range. We discussed how at this point, it's a little different, actually a lot different. Let's look at this on the, and we can do it here or on the ETF, but get more data. Whereas when the trading range began, the moving averages were far apart and was all whippy. Right? And now it's getting tighter and tighter. And we see that through the eyes of the moving averages, so to speak, where they're all clustered in the same area. But we can see the pivot highs and the pivot lows are getting closer together. Right? The highs are getting lower and the lows are getting higher. And this price action here is bullish at resistance, which suggests this could go up. So is this the time where the others stall and the Russell plays catch up to push up toward the highs? Now, ideally, the other markets would be in alignment where maybe they would go up and we'd have everything going up in unison. Doesn't always happen that way, but maybe this is where, money rotates from what has been working. Look, we looked at the S&Ps and tech, and it goes into the small caps and pushes it back up to the top of the range. It's certainly at, the bullish action over here, right? That topping tail didn't follow through. This is pushed back up, but it hasn't been able to really pick up any momentum yet. So interesting setup right there. And the Russell, new all-time highs, peekaboo in the futures, the greater than 100% retracement, and then the stall. Hourly chart still in an uptrend, to pull back to support, waiting to see if that rolls over. Maybe it pushes higher. Again, nothing to do here, but on these charts, but to wait to see, does this actually turn down to pull back here after this strong move to where buyers are more comfortable to step up again and see if this move up continues, which the way it went up implies that it should. And after holding this area, and it was all whippy and the wide range bar igniting, and now it's pushed up here where it should stall, and it is stalled. Just to look at the cash there, made an intraday move to new all-time highs and then backed off. I'm not checking the numbers, but visually that's what I see there. T-Bucks asked me, when you have a minute, could you review SPX and SPY? Well, sure. Well, today's Thursday. We don't have 0 DTE day, but if you want to get ahead of and looking at tomorrow without the data, it's the same at the destination. Let's just remove this one for now. And let's turn this green. That was the big open interest area that it pushed through and went up to the next area here. So it stalled. And again, I haven't looked at the options data, but based on the stall, maybe you want to get ahead and see what premium's way up there for tomorrow, or way down below. But we'll review that tomorrow morning. So unfilled gap down here to pay attention to, the one from yesterday, that hourly still going sideways, and that being at this prior high and the depth of that pullback there, there's really not a momentum move. So it's not your classic M top of a type of a pattern, but it could be a double top, yet to be seen. This has created the void. 44.40 for tomorrow, put spread 44.40, 50 MA, unfilled gaps, cluster of bars here, no brainer, right? No brainer, put spread for tomorrow. It's not going down there unless some crazy news hits. We had the jobless claims, check your economic reports, earnings, right? There was that negativity yesterday with IBM down, Tesla, and so on. So it's not going down there tomorrow unless there's some event. 45.90. I'd say that's a no-brainer as well. Not going up there tomorrow. I mean, it's here. It could push above that high, right? What we already discussed. But to go all the way up there after this run, I mean, look, we look at the charts, we look at what they've done. We know historical price patterns, we know concept, support, resistance, void, so on and so forth. And then we apply common sense to it. Is it likely to go down here based on that information? Is it likely to go up there? No. All right, let me move along. Bitcoin stalled here. After pushing up to the highs, greater than 100% retracement. Yes, makes all sense for it to stall, but wow, what a move. Oil, right, continues to push up. Right? The administration's way of making energy expensive and making clean energy less so, right? Putting windmills on our houses and solar panels and maybe on the top of our cars. Right. Gold just continues to be whipping back and forth. Silver made its nice move up, looking to the left, up at that pivot high, likely area for it to stall. Obviously it has. This has broken the hourly trend, and so it's begun to roll over. So for intraday trading, silver could be considered as intraday shorts, but it's pretty whippy. My internals at an extreme, really close, very close. So, based on where they're at, sentiment hasn't hit the upper bands yet or getting above that, but it's close. That's where it backed off from the last time. But if this push up above that high, the greater than 100% retracement, we'd have a pattern, a concept, right? Greater than 100% retracement and internals lined up, which is based on the pattern in itself, would suggest it's going to pull back. And then we go through the same process I've explained. Hourly chart breaks, intraday shorts. This you're waiting for some type of pullback or correction for a buy setup based on the level of retracement here. And of course, if it was to waterfall all the way back down here, well, the whole thing changes and evolves into a whole nother scenario. Right? All right. Transports. Right, we know they've been doing really great, quite bullish intermediate term for the markets that these were able to turn around. So that looks good, but obviously another pattern that suggests a retracement because of how far they've moved so fast. And this is an interesting chart. Bonds breaking through the prior low here. Now, I haven't looked whether this is because this is a continuous contract. If I put on the current contract, I don't know if it would be below there. I'll take a look at that later myself. But we see the 10-year is not up above this high here, not above this area, but like these have been going up, which, you know, talk about tapering and all that. This chart here, you know, this curve has been spreading apart. The shorter term ones have been contracting a bit because the shorter yields have been going up faster than the longer ones. It's not a concern yet. Talked about this early in the week, but going to keep an eye on this. So overall, bullish move up in the markets, SPX, Qs, wherever you look, at resistance, likely to stall, whether it's today, tomorrow, or rolling next week. It's the short-term message to the long story is be cautious on longs, and it's too early to short unless things have already rolled over. So, all yours, Dan. Do I look at a 2-minute chart at the open? Yes. Yes, in YouTube, yes. You can use smaller time frames at the open. Things are more aggressive as long as higher time frames are aligned.
Good morning. So our opens are fine. Yeah, I posted the spider call spread already, and part of the reason I did it was because of this pre-market bounce, I guess, on the employment numbers, because I was a little reluctant to do it if we're gapping under yesterday's low, because I was going to wait and see what happened at the open. But now that we got the bounce, yeah, under yesterday's low, because then it would give up all of this pre-market strength. Yeah, there's a number of good gappers here today. Let's look. I gave you all a big list here. I went through a ton of earnings already, and I deleted them just because there were too many to review with everybody. But yeah, look at Crocs is on there. I need more thumbnails, believe it or not. So Crocs gapping over this ugly red bar after 100% retracement. It's a bullish pre-market 15-minute chart. Target, start off 155. So sure, that looks good. The two heavyweights yesterday, IBM 135. That's a big ugly gap. I don't know which way that's going to go. Tesla, obviously. Remember I told you anything that runs, I don't care. Anything that runs this far into earnings the next day, regardless of where it opens, up, down, sideways, I'm bearish. 30-minute low. I say that's where I would love back testing. Just what I just said, something far from the 20, multiple bars up into earnings. I just want to fade it every time and tell me how successful I would be by back testing. Greg, remember Hotel X-ray I mentioned yesterday?
Yeah.
I said if it gaps up, look at that. So this is what we call a wide range ending bar, far from the 20, multiple bars up. Look at the volume. So that's kind of capitulation volume. Now you're gapping up another couple bucks. That's like, if it takes out 30-minute low or even, more aggressive, I'll keep an eye on it. That's like the last of the Mohicans, at least short term, trying to chase whatever's going on with this thing. Kind of looks like a Reddit short squeeze toy to me. And if so, they're doing a really good job of it. And there's no option, so we just have to trade the stock. So we here is WeWorks finally going public through the SPAC. CEO was on blabbing today. They're going public. We'll keep an eye on it. PPG, I can't tell where you're gapping. Lester is a transport of $2, no pattern. Triple G, gapping down under this. We'll come back to you. It's trading range now. This thing's gapping down a little bit. It could maybe 30-minute low. Could be a short. CSX, a railroad. Gapping up strong, but it's far from the 20. And CNI, remember we traded this railroad the other day. What a beautiful, beautiful gap breakout we had right there. And we rode it for 3-4 days before earnings. No pattern, but that's bullish all time frames. TBK, volume's too light actually, now that I'm looking at it, but what an amazing breakout right here. Wow. Now see, I hope everybody who attended MT Live has a new appreciation of moving averages. Doesn't this now tell you a totally different story after our session yesterday? Just look at the MAs alone, and now you add downside shakeout, you add trading range, you add gap reversal, you add this, and then a gap closing. That is a no-brainer long right there. 20 above the 50, above the 200. That's a great breakout with moving average an agreement. Jacopo Ali. Yeah, sure. You can buy a breakout. Sure, I'll put it on the list. Thomas Intel. I don't know what you're looking at. You know, it ran to the top of the range, gapping down here. So you got to tell me what you were thinking. Semis are down here a little bit too after a run. BlackBerry, it's a 1, 2, 3. All right, let me continue plowing through some of these. These are earnings stocks. TSC, gap's too big. Brothers, it wasn't earnings, but I just noticed it yesterday as a recent IPO. Here's Crocs. Gap's actually pretty big. I need a pullback on that. Myrna, 30-minute high, put spread idea for tomorrow. The FDA is approving these drugs for kids now. Greg, they'll make you happy, I'm sure. Diego, General Motors. If it closes here, it's a 1, 2, 3, and it's also a sloppy kind of bull flag. I don't like all the overlapping bars to the left. I'm sure we can find better. UL kind of trades like an ADR. Look at those railroad track. That's a power downtrend, but it might be trying to bottom. Yep, last AutoNation at earnings. Yep. But there's no pattern is the problem. It's a big old excessive gap near the destination. Inside gap here, nothing to do for now. All right, hotel X-ray, what did we say, folks? It's just a matter of how aggressive you wanted to get on board. Let's watch a bounce in it. T earnings. If you can sell a put under yesterday's low, if there's any juice, that would be okay. Q's weak here. Tesla's actually rallying. Google is the weakest thing. We mentioned that yesterday also.